I trade the Forex markets because the amount of freedom and lifestyle it brings is unmatched. I do this using mostly other people's money, and I'll get into this later on in the video. And once you master the art of trading, your lifestyle is then your own. I'm Jack Beanie, main trader for the Limitless Trading Club, and I've been trading the Forex markets for over 7 years now, and I previously run a service-based business alongside of this, till recently I shut that down to focus more time on the community. So first of all, what is the Forex markets and what does Forex stand for? Forex stands for foreign exchange, or the currency exchange markets. The Forex markets have between 5 and 7 trillion pounds worth of currency moving through them every day. So there's a lot of movement in the markets. These markets are open 24 hours a day, 5 days a week. That is from Sunday at 10 p.m. until Friday at 10 p.m. I normally wouldn't trade on the Sunday 10 p.m. open. I would normally trade from Monday right through till Friday. So this gives it the second longest opening markets over the crypto markets, meaning compared to indices and stocks, we have got more time to trade the markets themselves and don't have to have a certain time frame we're capped to. So before we get on to the course and how you can become a trader, what are we actually buying? And as a Forex trader and a day trader, you are looking for price movement in certain currency pairs. So for example, we're going to move over to AUD CAD, which is the Australian dollar versus the Canadian dollar, and we are looking to predict where price is going to be moving, if that's in bullish or buy movement or bearish sell movement in the markets for that day or that week, and we want to catch small movements in between that. We call these pips, and pips are the amount price has moved in that time frame. So if you're on the 15-minute time frame, that candlestick has moved in pips. Same again if we was on the hour, the 1 hour or the 4 hour time frames. Each candlestick that is shown will show us the amount of pips has been moved in that time frame. So we use everything in pips and in time frames. So what do you need to trade? You need first of all a device. That could be a phone, a tablet, a laptop, or a computer. I use an iPhone, a MacBook, and a Mac. That then helps me do stuff on my desk, but also be movable, so I'm not capped to anywhere, where I can take the MacBook out and also watch trades on my phone. From there, you're then going to need internet. That could be Wi-Fi or 4 or 5G, depending on the device you're using, but all you need is internet access to the markets. You then need funds, which we can either have personal funds that you've added into your trading account, or we use something called funded accounts, where we purchase an account off of a prop firm. They give us a challenge, we pass the challenge, then we have the funds to trade, and they take a small commission on anything you place. And then finally is software. We need certain softwares like TradingView, which I'm going to show you in a minute, and then other stuff that we need to add into our trading to be able to access the markets. So there's not a great deal. There's only 4 major things that you're going to need, which I've just listed. So mainly on my phone, I will be looking at 2 apps. One is going to be MT4 or MetTrader 4. This is where all of my trades will be placed. And then afterwards, I will be looking at TradingView, which I then link this device to my MacBook and also to my Mac. So any analysis I do on this app on the charts will then be added to all of my devices. So if I've left my Mac and MacBook in the office, I can always update and check charts and trades from my phone. So MetTrader 4 is going to look something similar to this, which is where you then see your currency pairs and where everything is going to be placed on what pair you're selecting. And then your home screen is going to look like that. That just shows you how much capital is in your trading account. So after that, we're then going to go for TradingView. And that is then going to allow you where all your currency pairs are and where you can find them and have your watch list. So let's get onto a screen record and I'm going to show you how to become a trader. So now that you've set up your TradingView, your MT4, and you've got your broker with funds in the account, we can look to now show you how to place trades and what I'll be looking for to get that set up. So before we actually use the trading view and get stuck onto the charts, there's one important thing that everyone needs to look at before placing trades, and I look at this every Monday before I do any analysis, and then again before I place any trades, and that is check for any high impact news. So any news around the world that's marked as high impact news could move the markets in either your direction you want it to, or in the direction you're not wanting it to. And as traders, and my strategy I'm going to teach you, we do not trade around high impact news for any sort of gain or value towards that. So if we can stay away from high impact news, that is very good. So first of all, I'm going to head over to here, which I've got pinned up to it. You can see is Forex Factory, and that's going to bring us up a calendar of everything news related to the Forex markets. So as you can see through here, we've got everything in yellow, and then we have orange and red. Yellow and orange we are not concerned about. That is news that is not high impact and will not move the market in any sort of way. We are looking for, as you can see here, in red, which is marked as high impact news, and then it gives you a time frame of when that's going to happen. So tomorrow, which is Tuesday the 16th of September, we have high impact news on CAD, the Canadian dollar, at 130. So in a minute, if we was going to look to place any trades on AUD CAD, we would have to be careful and think about that tomorrow afternoon we have high impact news on that pair. Same again for USD. So I was looking at any Euro USD trades. I would need to make sure that I've either got the setup correctly to calculate that's going to happen, or we don't place the trade until after the news has gone. If I'm already in a trade from like the previous day or the previous week, so let's say I placed a trade Friday and we're now running, and then Tuesday we have news, I would look in to get my stop loss to entry before the high impact news, or if we was at break even, I would just close the trade and then re-enter again if the markets didn't move anything. So try and play it safe and not use the markets as a gambling. So now you understand how it's going to work. You can see coming all the way through here, we've got Wednesday and Thursday, got a little bit of high impact news on CAD and USD again, as well as NZD. So a little bit later on in the week, a little bit high impact news coming through. So a little bit careful and think about that before placing trades. Now we can get to the fun stuff, and the stuff that I like is chart work and placing trades. So what I always want to do is pick a currency pair. At the minute, this is live data. As you can see, we are here 15th of September, and this is what's happening so far. All I've done is just cleared my screen so that you've got none of my chart work on here, and we're going to do it together so you can see how a professional full-time trader would look at the charts from fresh. On this side here, so this is trading view itself. This is where you're going to use and do a lot of all your analysis and your back testing on. This over here is where you're going to have a watch list. You can create that by adding the add icon and add any currency pairs you want. I would suggest, if you're a new trader, and you probably are if you're watching this, to only stick to 5 or 6 currency pairs so that you understand and get used to them currency pairs themselves, instead of having all 25, 27 currency pairs plus crypto plus everything else. You're just not going to understand how the individual currency pairs move and what each one's going to take for it to become profitable. So let's get stuck in. First of all, I always want to be on the weekly time frame. To any sort of trades, every week I will do this.
Just run through pips and candles quickly.
Okay.
Because you mentioned it, but I've not seen it yet.
Cool.
So they might be brand new to these clowns.
So we're on the weekly time frame. First of all, we're going to talk about pips and candlesticks. I've already mentioned them, but now you can see them, and then we can show you where I'm going to put my support and resistance and why we use that. So first of all, pips. We can see this little number lit up on the side here. Your trading view will look a little bit different to what mine is, because I've customized mine over the last 7 years. And if you want to have yours the same as mine, that is in the Limitless Trading Club course. I've got a whole area talking about trading view and also how I've set mine up, so you can set it up exactly the same. So what we're looking for here, pips are basically the number price has moved in that time frame. So we are on the weekly time frame. So each candle is calculated in pips on how much that's moved. So we can use over here the calculator. We can do the bottom of this candle all the way to the top of this candle where the body closed. And that there worked out at 130 pips, 0.8. So 130 pips is what that candlestick did in a week's worth of movement.
Yeah.
So then we look over, now you understand what the pip stands for, and you can see that on the side here where they're being calculated in the movement, is then what a candlestick is. So the candlestick is just showing us where price opened. So the bottom of the candlestick here is where the price opened on the weekly time frame, and then where price closed. The actual wicks themselves, if I zoom in there, the actual wicks themselves is where price actually went to within that time frame. So within that week of time frame, price went all the way up to here, and then price actually did pull back here to be a bearish candle, not a bullish candle. So you can see that here as well. This is really, really clear. Price moved up. Price then actually went all the way up to here, but then pulled back because there was more sellers in the market than there was buyers. The candle still did end up as a bullish candle, so meaning that it was still a buying candle, but there was more sellers in the market than there was buyers. So let's get onto the weekly time frame on everything, and I'm going to plot out what I'm looking for on the weekly time frame, and that is support and resistance. So basically, support is where price has come to a level multiple times and rejected that level, and we call that support because it's holding the weight of price. And then resistance is where price is rejected multiple times but above where current price is, and that just shows you as a resistance. Price is resisting that zone and doesn't want to break through it. There are two key zones that we're going to use all the time in price and when trading. So I've got a setup marked out that I've previously found before we started, and I'm going to use the replay feature for back testing. So we're going to do this as if it's a live setup, but I'm going to use the back testing feature, and you will have to pay for this. So you have to sign up to a premium subscription with TradingView. I think it's about £35 a month, depending if you can get a deal, or if they do a summer deal or the Black Friday deals. And we're going to be showing that through as if we was back testing, and we need to use that every single day, and I use it 1 hour every day, the back testing feature, and that just keeps my edge in the market. So if you're new to trading, you will need to be doing loads and loads of back testing to understand the currency pairs and how the strategy is going to work. So we're going to use replay. So first of all, if we want to go back to a previous time in data, so we're going to go back a year, 2 years, 3 years, you're going to use this little fella down the bottom, and then you're going to either type in what time you want, or you can just click back through and select the date you want. We're not going to use that. We're going to use current time, which is in front of me, and I've got it set up. It was happened a couple of weeks ago. So we're going to drop down. We're going to replay mode here, but I'm going to drop down to the 4 hour time frame and make sure I've got the correct setup. So what we're looking for here is we're going to look for a setup of a double top. So I'm going to pull that back to there. So this is where we're going to replay to. So you can see now price, this is a very new feature to TradingView, and it shows replay. So that a lot of traders can't show setups that weren't real without having the replay feature in there. But previously, you never had that replay feature displayed on the center of the charts, and a lot of unreal traders or traders that don't show their wins and the losses were just showing back testing setups that they were saying was real. So let's get into this. We are weekly time frame back to. So now I've got the setup set up. I know where I'm looking at. We're going to look for stuff on the weekly time frame. So first of all, we need a support and resistance. So we're going to look for, and I will mark these out here. So if you go in the top, second one down, and then go horizon line, this is what I mark them out. It's going to be in a dark grey, which is you mark them out. They will be a black or a different colour when you first open up your trading view. And what I'm looking for is multiple rejections where price has come back to roughly where price is now. So as you can see, price has rejected this area once, twice. We broke through it and below it here. Price rejected it twice there, and we have these multiple wicks here. So I'm going to set that right there. So that there is our resistance, where price is coming to and is trying to break above, but failing to, and is rejecting that zone. We now need support, where price is coming back to, and it's sitting on that line. So we're going to copy and paste that. And we're going to look, if we look for, even go back, always look left. When you're looking for previous data, always look left. The markets will show you what you're looking for. So we're going to go through a zone here. So you can see price here tested once there, twice. It then rejected and broke through here. Price pushed straight through there, and that's not a problem. Price sometimes will push straight through a weekly zone, just looking for multiple rejections. We need to see at least 3 times where price has rejected that weekly zone for it to become a weekly zone. But then we have a lot of movement coming through this centre here where price rejected it, also broke through it above and below, and then we come through again with some lovely rejections to where price currently is. So now we've got our support and our resistance marked out. We'll drop down the time frames. So normally I would do the support and resistance on weekly or daily. We'd never do anything less. So now we're going to drop to the daily time frame and we're going to look for structure. And structures, I'm looking for certain patterns. We've got 4 main patterns I'm looking for. One is a head and shoulders, so it's shoulder, head, shoulder. One is an inverted head and shoulders, which is the other way around. So you have a shoulder, lower head, and then an equal to right shoulder. Then we have a double top, which is what we're going to look at, and then we have a double bottom. It's just price rejecting the support, the resistance, sorry, or the support. So that's what we're looking for. There are 4 main structures I'm looking for. So we're going to keep zooming in on the time frames as we drop it down and look at what price is currently doing. So price has already rejected this once previously, and that is about 2 weeks previous. Price has already rejected this resistance zone, but it hasn't quite tested it just yet. We also have, if you can see these, and you might be thinking, what are these weird lines across my charts? For a lot of traders, I do have a very clean and clear chart. I do not like loads of lines. I do not like it messed up. Some people have it really mad. They have 50 indicators, they have lines, graphs, everything. Makes it confusing. Keep trading simple and easy and you will enjoy trading. If you've got loads and loads of stuff in your charts, you will not enjoy it and you will be stressed out all the time. So, nice, clean and clear. We can see this red line here is called an EMA. And this is a 50 EMA, so this is an average of the previous 50 days. And we use these as pullback and rejection points. So we will mark this out here, and this is what I'm going to mark out now. And I have this in the horizontal ray, not the line. That will come out in the dots, keep it nice and simple, same colour as everything else. And I'm just going to put weekly 50. And now as price moves throughout the week, out the month, I will alter that to where that EMA is. So I always know where the weekly 50 EMA is as either a barrier or to where I'm going to have my stop loss or TP. So now we're going to come to the daily time frame. You can see we now have another EMA, and that is the average 50 days on the daily time frame. So we're going to look at that. That will also need to be marked because we're going to use that as well in our trading. So I'm going to mark that as daily EMA. And it stands for exponential moving average. That's what it stands for. So if you need to add that onto your charts, or add that in now, because I should have said that earlier on, you're going to go to indices, drop down. So if you can't find it, you have to search for it. I've already got it here because I've used it before. Moving average exponential. It comes back to front for some reason, but that's what the EMA is, and that's what you're looking for to add on. Once you've added that on, you will need to then select that and alter that to the 50 time frame. So I will actually show you that now to get everyone understanding. So we're going to add one of them in. That is right the way down here. We're going to look to edit that, and then where it says length, we're just going to go 50. And then we are going to do source is going to be closed, offset 0, type none, and then we're going to do chart, and that then wants to just be on the chart we're on. Wait in time frame close. So it waits for the time frame to close. You can see now that it's actually overlaid my red EMA because it's in a blue colour, and it's as simple as that. You just set it up. You can change that to whatever colour you like. Obviously, I always have the red as red because that's what worked for the strategy, and that's what I was taught, so that's what we use. So now we've done the daily time frame. We can see where the daily 50 EMA is and what price has done. On the daily time frame, we had a really big push up, and now price is starting to slow down and give us a bit of a rejection against that resistance zone. So now we're dropped to the 4-hour time frame, whereas I want to see where the structure. I need to see that double top, that head and shoulders pattern rejecting that resistance zone.
What is structure?
Explain structure. Structure is already in there, yeah, of what patterns we're looking for in structure. So what we currently got now, we need to mark the 4-hour 50 EMA. So now this is coming down in the time frames. This is the biggest one I use, and this is normally where price pulls back to, or I'm waiting for price to reject that area. So we're going to put that in. 50 EMA. And I'll alter these again as price moves. So what we're looking for, we can see price has pushed up. We're now waiting, we had a little bit of a pullback, which is what happens. After a big push, you will always see price pulls back. We had a big push down, pull back. Big push down, pull back. Then we had a big push down, and that then come back up to create a new equal high. So just give you an idea, after a big push, you will always get a pullback, and normally a double pullback. But you can see price push back once, it then pulled back a little bit, and then push back down again to then give us a double pullback before then pushing back up. So we need to here see price reject this sort of area, so that a weekly resistance zone. I need to see a rejection of that. Then I can look to zoom in on the 1 hour time frame to see if I can catch a trade with the MSB, which stands for Market Structure Breakout, and then following from that we get the MSBC, Market Structure Breakout Continuation. So I'm trying to catch 2 trades out of 1 piece of market structure, so we can double up on every market structure that is played out. Sometimes we won't get in on an MSB trade, but we catch the MSBC, and sometimes we get an MSB, but we can't catch an MSBC, and sometimes we can catch both. It just then opens up 1 piece of market structure to multiple trades. So what I'll wait for now is on the 4 hour time frame is to see that rejection and price to create the structure. So we're going to use on this replay mode, we've got 2 options. This button here, it says play. If we press this once, it will then just keep playing candlesticks on the multiplier we've asked for. So over here we've got a speed relay of 1. We can add that up to 10, and we can bring that all the way down to 0.1. So that then will just play them out as we go. I don't like to do that, but I much prefer to just press the single button, and every time I press it, it will bring a new candlestick. But before we get stuck into that, I need to show you something about candlesticks on replay mode for your back testing. When pressing this, we're going to press it now once. It glitched out. So when using the forward button or section of trading view, you're going to have a slight small lag. And I'm going to show you that. So when I press this once, we're on the 4 hour time frame, this is going to show me the next 4 hours of price action in a candlestick. So you can see where price opened and then where price closed. So don't be too eager on the forward button. Just press it singular and let it show you where price opened and then where price closed. So we'll show you that again. So when I press it, price opened, price closed. So you can see that candle was bullish. So in green, price moved upwards. Normally people have it in red for downwards movement. I prefer it in grey because it's a little bit more subtle and just what I prefer as a trader. So now we're just going to keep pressing that until we can see price make the structure we want, which is a double top, which is to push above this high and try and retest this weekly zone. You've got to remember with zones that they're not a perfect line. So ideally, the best way to mark the zones out for a little while, if you're a beginner trader, is to use the rectangle box and mark them as a bigger box and area like that. Because this is what we're looking for. We're looking for price to reject that box area, not just a perfect line. I just like to use the lines for preference because they're just neater and make the charts easier to work. We're navigating what the charts are trying to do and what they're telling us. So the cleaner and clearer that is, the cleaner and clearer your trading will be. So we're just going to keep going through until price moves up. We might not get that. Price may just move straight to the downside and then we've got no setup. That's what we're looking for every day. We're looking for setups that are going to play out, and then ones that do play out and they meet criteria, they meet my traders checklist, I make sure they do, and then we enter the trade. So we're getting there, we're waiting for price action. So now we can see we've got a little bit of price action. Price is pushed up, prices then come all the way back down, and price is pushed back up again to reject this weekly zone. We now drop down to the 1 hour time frame to have a look at where a potential entry could be. But now price has moved, we need to check the EMAs. So on the 4 hour time frame, you can see price has moved up ever so slightly. That will have only moved the daily a little bit, and it would have not moved the weekly at all because it wasn't enough movement across the time frame we was on. So back to the 1 hour time frame. This is where we're going to look for our entry, and then we can look forward there to where to place our stop loss and TPs. So for the MSB trade, ideally if we can go up to the 15-minute time frame is where I want to see the pullback. So if we do that now, then we can use something called the Fibonacci or the fib retracement, and that's going to tell us if prices pull back enough. So as you can see, so that we've just zoomed in. All we've done is we've gone from the 4 hour to the 1 hour to the 15 minutes. Every candle is going to show you price movement in 15 minutes. So what we're going to use is something here which is called Fibonacci. So you've got that right down, third one down, fib retracement. Fibonacci retracement is named that after its founder, and that's what we're going to use. So I would use this from the very top of here right the way down, and what we're looking for is price to hit a minimum of 382. So 38.2% of the entire push we need to see it pull back to at least. Here you can see price pull back to the 50% fib on there, and then we had a movement to the downside. So we know price pushed and exhausted, and this is what we're looking for on the MSB trade. So I'll show you that quickly now before we move on. What we're looking for is this is our weekly zone. We're looking for price to come down from here, up it comes, it moves up again, moves about, and it comes up and rejects that weekly zone. Yeah. It then moves down a little bit on the 4 hour or 1 hour time frame, or even the daily time frame if you've got a really big double top. Price then looks to bumble about here in the neckline and then push all the way back up and just take out that previous high. So now we've got a new higher high made. We're then going to look for price to push away from that and reject the weekly resistance zone, and then we want a little pullback. That there is going to be our entry, and the reason we wait for that pullback is just to get a better entry. After that, we then are going to look to grab the continuational push between where the pullback was to the neckline of our structure. So that's the MSB. Then we would look for the MSBC. Price would come through to here. We go through the neckline just to break below these previous lower lows. So now price has gone from bullish movement to bearish movement because price has now created a new lower low compared to the higher lows that were previously being made. So price is going to push down, create a new lower low. It's raining. Then we're going to look to get a pullback, preferably a double pullback, once, twice into the neckline, and then we're going to grab a trade from there on the MSBC. We're looking for that continuational push down to wherever our TP is going to be set. So we tap that out. I'll put the neckline in place so you can see where that's going to be. That would be previously, normally a neckline will be where there's been previous rejection. So you can see we had a previous rejection here. We had that marked out. Price pulled back to this previous higher high to create a new higher low. We then created a new higher high. Price then on the MSB created a new lower low. We had a pullback of a double pullback and rejected the neckline, and preferably could have a 4 hour 50 EMA. Where are the pens? There normally is a pen mark here. I haven't used the pens for so long. There we are, brush. So we could have a 4 hour 50 EMA come through here, right through here, and then could be looking to come just into there. We've pulled back to the 4 hour 50 EMA, and then we're going to look to grab a trade all the way down from there to where we've marked out, down to this area, and this is going to show us where the trade itself is going to be and how much we're going to gain from the trade. So that's what we're looking for on both setups, but we're just trying to move it into the charts. So now moving back to here, we was looking for the entry on the 1 hour. So let's drop back to the 1 hour time frame and look for our entry. So we had our first engulfing candle. So you can see the previous bullish candle there in green. Then the grey candle, the bearish movement, the downwards movement, engulfed that. The body there, the top of the body and the bottom of body engulfed the top and the bottom body of that candle. We do not include wicks when we're looking for engulfing candles and them the body movements. So wicks are not encountered. So we're looking for that. I would have taken either them two, so we had that really engulfing candle and the pullback as an entry on the 1 hour time frame. So we would have been looking to enter our trade right there, just before we had the next bearish push. Or we could use the 15-minute time frame and had an entry on these two double engulfing 15-minute time frame candles on the trade, and that would have looked like this on these two, and then we could use the trade from there. Usually prefer to do it on the 1 hour time frame. What all that means is I haven't got to check the charts every 15 minutes. I only need to check them every hour when I know the setup is nearly ready. So it just saves me being invested in the markets too much, especially if I'm not in the office in the mornings. So now we need to look, now we've got the structure there and we know we've set up an MSB trade with an engulfing candle. So the candles are showing us it's all there. All the EMAs are there. We need to go through our traders checklist, which we'll do that in a second. Then we can look to see where we're going to push our stop loss. So you want to, if you haven't got a traders checklist, this is my old one, and now we have a newer updated version. You will find that in the resources section on the community of the Limitless Trading Club. So all the resources and everything I talk about here will be found in the Limitless Trading Club. So if you want to head over to there, you will need to book a strategy call with either me or Sam, and then you can have access to everything you need to trade. So first of all, we need to make sure we've got the currency pair correct that we're looking to trade. Then we've got a weekly or daily time frame resistance zone or support zone tested. Here we have a resistance zone tested on the weekly time frame. From there, we're looking for structure. We have a 4 hour time frame double top. That's what we're looking for. I haven't put the neckline in. That would be helpful. Try and always put it in the center and keep it nice and clean and clear. That's what we're looking for. After then, what trade setup are we after? Are we after an MSB or an MSBC? On this one, we are after a MSB, so that will be marked down. From there onwards, we are looking for EMA crosses on this currency pair. So have we got any EMA crosses on this time frame? So let's go 4 hour time frame. We do have one here. So before the big push, price pushed all the way up. We had a pullback. That created the cross. Now we're looking for that continuation of push up. So price is crossing. That means that just gives us an extra confidence. Normally when you've got a EMA cross, it shows you that price is about to switch direction. It is moving. On the 1 hour time frame, I don't believe we do. No, not currently yet. We do not. We did have one down previously here before we had that push up, but we did not get one. And on the 15-minute time frame, we will most definitely have one. We have indeed, just after our entry or just before the entry and price pushed up, we had the EMA crosses. So we have the EMA crosses we are waiting for. Finally, we then, after the pullback or the retest, and we did get that, we pulled up our Fibonacci. We had 50% fib on the 15-minute time frame on this MSBC, on this MSB trade. So we are looking really good. From there, we have had our candlestick confirmation. So we have had price in a candlestick tell us that we can go for a sell or buy trade, and that was in an engulfing candle, as you see there. You also sometimes will have a morning or evening star or a double engulfing candle, as we previously had on a 15-minute time frame. I will show you a morning star now, if I can find one on the relay back. There is one right here actually. Here you can see price is moving up in bullish movement, so we're moving to the upside. We then have a in candle, which is called a high test, where you can see price come all the way up to test a height, and then the sellers moved into the market and pushed price back down, leaving a really tall wick. Then after, on the next candle, we have an engulfing candle to say that the sellers have now stepped into the market and there's more sellers than buyers. And we always wait for the candlestick to close on the time frame you're on. Do not enter a trade on the 1 hour time frame at 1:30. You wait until 2 o'clock until that candlestick has closed, because the candlestick can always change before it closes. So let's say this was, as it is, an evening star setup. We look to place the trade, we place the trade, and then before the candlestick closes, it then comes into a high test. And it's complete difference. Always wait for the candlestick to close on the time frame you're looking at before placing the trade. If not, you're a moron. And then the final thing we're after is to make sure we have the correct risk to reward ratio. That means for every 1% and 1% only you risk into the market using this strategy, we want to know how much we're going to gain back on that setup.
It's not gambling.
Because if we're just doing random setups and we're looking to gain random amounts backs, we're just going to be basically gambling in the markets. So if we can stick to a consistently profitable risk to reward ratio, then we will be better and profitable traders. So first of all, we've got to think about our stop loss. Where do we want to place it? Well, I want to place it above the high, and on AED CAD, I want to be 10 pips above the previous high. On some of our pairs that are quick movers like Euro USD, I would look to have 20 to 25 pips above the high to give price a little bit more room to breathe. So 10 pips, we are looking at 13 pips there. As you can see there, we've got the 13 by 12.6, but we round it up to 13. So that means we should be at 23 pips to be above that high. So that's where we want to be. 23 pips is where our stop loss is. Our stop loss is now behind the weekly resistance zone, so it's behind the barrier. Yeah. So once we've worked out where our stop loss is going to be, we can work out where our TP needs to be, our take profit, and that is where price, if price hits that zone, it's then going to close us out the trade in profit. Same with the stop loss. The reason we put a stop loss there is because if price breaks through that weekly resistance zone and then decides it's going to push up, we want the system to take us out of the market, because we are no longer saying that that setup is valid. So I'm saying if price breaks through the weekly resistance zone and moves up past this area we've put it at, then I'm no longer wanting to be in the trade, and we can look to exit that at a 1% loss. Or if you've got a £100,000 funded account, that would be £1,000. If you've got a £1 million funded or £1 million trading account, that would be £10,000, and so on and so on. So we're now going to look for our TP. I would look to, on this section, want to be down to these previous lows. Can we gain enough? The daily 50 is there. Let's have a quick look, see where the daily 50 still is. It is still there. We would actually, I wouldn't want to trade through the daily 50 because that is going to be a barrier. So we would come straight to that and we go for a 3.1. So I normally personally on all trades go anywhere between a 1 to 3 and a 1 to 5. Meaning every trade I place, I'm looking to gain back 3 to 5% on that trade. So on this setup, we're going to risk £1,000 on this trade, and we're going to look to gain back £3,000 if the trade comes in. Per account that we hold in funds. So if you've got 5 £100,000 trading accounts, you're going to put 1% on this of your trading capital, which would be £5,000 across all them accounts. So depending if you've got a £1,000 account or if you've got a £1 million account, we only risk 1%, but it just means the amount in money terms always goes up to how much capital we have to trade. Stop loss, TP, set and forget.
Yeah.
So now we've done everything. Everything on our traders checklist. Everything on our traders checklist has been met. We're happy to place the trade, so we now ignore that. We've set up our stop loss and TP. We're behind barriers for our stop loss. We're in front of barriers for our TP. We're now going to do something called set and forget. So you set the trade. You only risk 1%. So you do not care if it hits stop loss, and you do not care if it hits TP. You're motionless to the markets, and that's going to be the biggest thing to overcome as a new trader, is to leave your emotions out of trading, not wanting to trade every single day, every single hour, checking charts every minute of the day because you've got a trade placed. We're just going to set and forget. So now we've set this trade, we've placed it, it's now on your MT4 and trading account. We're just going to let it run. So now this is where I would use the replay function if we was back testing, or price would go through on live time and move that through. So on the 1 hour time frame, we're just going to now play it. We've got 1 times. Let's see what happens. The price is now going to move down. We've now had a clean break. We're going to pause that for a second. Price is now pushed right the way down through. Sometimes this will happen and sometimes it won't. Price could sit right at your entry for a day or two before then moving, and that could be good or bad. Price could move straight through into your stop loss. I've entered trades before where the next candle takes me straight out of the trade. And then I've also had trades like this where trade just goes straight to TP without even a single pullback. So now price has broken through the neckline. This is a bit of a smaller structure, so sometimes if you've got a really big 4 hour time frame double top or head and shoulders, price might take a little bit longer and you can catch a bigger trade in between the MSB and MSB setups, meaning between the top of the structure and the neckline. We're now going to see if we can get a pullback into the neckline, which would look something like this.
Would you put stop loss to entry?
We would do that, Sam. We would then look for a pullback into here, before then another push all the way down. But once price is hit 2% in profit, I move stop loss to entry. So now we are at bang on 46 pips. That means price has pushed down. We are 2% in profit. So on this trade, if we had a £100,000 trading account, we would be £2,000 up. I'm going to move my stop loss from up here to all the way down to our entry point. There is at 903 on the scale. So then we have got this trade at risk free. So now if price pulls back up, we will get taken out of the trade at 0, meaning we haven't gained anything, but we haven't lost anything. So we're still looking after our capital when trading and taking the risk away from the markets. We can see if we can get our pullback on the 1 hour time frame, and then we look to grab an entry and see if we can get a double trade off this one piece of structure. So we'll use the forward button again now. So if this is what you would do if you was back testing, or if you were on real time, you obviously got to wait for price to pull back. Price is very, very close to TP and is currently sitting around a lot of them EMAs. Let's see if we go back to the 4 hour time frame, where our 4 hour 50 EMA is sitting right there, where our daily time frame EMA is. That has now moved up a little bit. That's where you'll be careful. Do not put your TPs bang on your EMAs, because they will move, unlike support and resistance zones. And then the weekly time frame should still be roughly where that was. Nope, that was the wrong one. It has moved down slightly. Back to the 1 hour time frame on this pullback. So we didn't get the pullback we wanted. See where I see price broke when we tested the weekly? Didn't get that. Price pushed down further before then pulling back. So we're going to use our EMA. We're going to use our Fibonacci retracement again, and that is going to run from where our push was, where we entered, all the way down. So you can see here, price hit 382 fib there, and also had the 4 hour 50 just above that. I believe, somehow, Jack deleted the 4 hour 50 EMA. Because it's not there. Yeah, it should be there.
It is there.
It is there now. It was just lagging, so it wasn't my fault then. Lovely. So now we've had the pullback, we're going to look for the entry. The entry for me would have been here, where we had this lovely engulfing candle. We had the first pullback, price then pushed back down. We had the second pullback coming in to test into that 4 hour 50 EMA, which I will show you there. You can see price tested that 4 hour 50 EMA once, then it tested it twice, and now we're looking to grab a second short trade. So I'll be looking to place a trade right on that engulfing candle. So that is a very clean engulfing candle. You can see price literally broke. You can see price opened up at the same point, but then closed at a lower point there, engulfing the previous candle. So we're going to be looking to enter here. Again, I want a 10 pip stop above the previous high. So the previous high was 10 pips. We're going to have a 20 pip stop loss, which then will put us just behind. Put us behind the 4 hour 50 EMA, which is beautiful, but also put us beyond that neckline, giving price a little bit of room to breathe. We are going to be a little bit tight here, because where our previous stop loss is only a 1 to 0.2, and I wouldn't take that trade. So I would look into a 1 to 3 minimum. So what we could do, we could have stop loss to entry before we get to that daily 50 EMA, and we can see if price will go through it. So we've already got our first trade. We know that if it pushes down a little bit further, we're going to hit TP and gain 3% off of that. We can get stop loss to entry on our second trade, our MSBC, before it hits the barrier of the daily 50. So if price does reverse and reject the daily 50, we get taken out at break even. If not, we can look to see if price is going to run right the way down for another 1 to 3. And let's see how we get on. So now we've got 2 trades running, 1 stop loss to entry, 1 currently just normal stop loss, but we will move that stop loss to entry as soon as price gets near the daily 50.
Would you not look at where that entry is in at bottom instead of just leaving it clear? Would you see what structure was quickly?
What do you mean?
Like this one you've gone down here, would you see what structure was down there before?
So So with this TP on this one, obviously our stop loss was put behind the barrier there, behind the neckline. Our TP, I'm looking at where I can set that. So you could run that all the way down to the weekly support zone, but I've looked at previously, we got some lows here and price sensitivity in here. So you can mark a mid zone in there, and that's then, I wouldn't want to trade through that barrier because price could reverse and takes out the trade for no reason, because of us just being greedy. So we've got a lovely 1 to 3 there. Let's see if this is going to play out. We are on the 1 hour time frame. We've got our structure still setting up. Trade is stop loss to entry. Let's go. Price may pull back to entry. That is very common for price to pull back to your entry point. So do not put stop loss to entry too soon. We are now in a loss. Possibly could get taken out of this trade. Nope. Not so far. We did. Price got taken out of this second trade at stop loss, but we still have the previous trade running. So this is the good thing about the MSB and MSBC. We have 2 trades. As you can see there, Sam has now just changed everything because he doesn't know what he's doing. He pressed the space bar instead of the pause button. We need to pause that because that will just keep going.
Don't do that anymore now.
No, that changes the watch list, sir. If you press space bar,
press that and tap each one.
No, you do not do that, sir. Yeah, that does space bar. Yeah. So, Sam's going for the old features. These are new features updated. Shows you how long Sam hasn't been on the charts for. Yeah, slacking. So, this is quite common. I've seen this probably, no, not common, but I've seen it previously as a trader, and you will come across it when you are trading. So, we gained 3% back on the MSB trade, but we lost 1% on the MSBC trade. That was because price pulled back to the 4 hour 50 and then decided it wanted to push through further. Could have had a bigger stop loss to save that, or we could have waited for a bigger pullback, but price met criteria, met my check sheet, and we entered the trade. So we still had a win. We made 2% on this setup. It was not the 6% we was looking for, but a win is a win, and you will have to take losses in your journey as a day trader.
Yeah, tell me about your average. So do you mean averagely I only pass?
So on average, trade-wise, I will only look to win 3 to 4 out of 10 trades. So if I've placed 10 trades, I'm only looking to, let's say, win 4 trades. I will have 1 or 2 that are going to come out at stop loss to entry or break even, and then the rest will hit stop loss. So if we've got 5 trades that hit stop loss, that means we've lost 5% over them 10 trades. We have 2 trades that go out at break even, meaning it doesn't really count either way, so we're still 5% in a loss. And then we have 3 trades that hit TP at 1 to 5s, giving us a 15% profit. So we minus the 5% loss off of the 15% gain, meaning for the total 10 trades, we will still be up 10% on all your trading capital, and we lost 5 trades. So it doesn't matter so much about how many trades you're winning and losing, but more about what your risk to reward ratio is and how much you're gaining back on your winning trades. As a trader and as a educationer.
That's good, bud.
Yeah.
Like that.
What would you call that?
Educationer. That's a new one.
I'm not sure that.
Jack the Educationer. This is that guy.
As a trader
and a mentor.
As a trader and a mentor, I always push.
Melt.
You fucking dick. It's been a painless. So as a trader and a mentor, I always push for more capital and less trades. Meaning I want you to place less trades and worry about placing loads and loads of trades at a time, but just gain more capital. If you can make 2% on £1 million account compared to 20% on a £10,000 account, you're going to make a hell of a lot more money and have a lot less stress levels towards trading, which you will enjoy more. You made it this far in the video, so if you want to watch more trading educational content from me and the Limitless Trading Club, make sure you subscribe to the channel where I drop 1 new video every single Monday at 5:30, and we have daily uploads on short form content. See you in next week's video.